Hello everyone. Today we will understand the golden rules of accounting. To understand these golden rules of accounting, we need to understand a little bit background of it. So every company have to prepare its financial statements for the year. In India, will follow April to March. So to prepare the financial statements, the company need to record all the transaction which have happened during the year in the accounts, and to provide the uniformity and to have depict the true picture of the accounts, these golden rules were introduced. So these golden rules are the guidelines which will let the company to account the transaction in a specified manner. So, in the golden rules, there are three types of accounts. One is nominal accounts, second is real accounts, third is personal accounts. Nominal accounts, real accounts, and personal accounts. So, the nominal account, I will explain each one clearly. First is nominal accounts. Nominal accounts includes all the expenses and the income and gains of the business for the year. So the golden rules will say that debit, there will be expenses and incomes and gains, right? So the expenses need to be debited, incomes and gains need to be credited. So what are the expenses? Example, if there is a rent, the company is paying a rent of 1 lakh, example, to the vendor X, but this rent expenses need to be debited. If there is an income, if there is a like a sale of scrap, by selling of the scrap they have generated 120k amount, so that income or gain that need to be credited. Second is real account. Real account includes assets and liabilities of the company. The assets, all the assets that need to be debited, all the liabilities need to be credited. Means all the assets. Example, if the company have purchased the machinery account will be debited. There is a liability, means if a company is purchasing or if the company is taking any loan from the bank, so that is a liability that the company have to repay the amount in the future in the form of EMIs. So that is a liability to the company. So that suppose if they have taken this loan from SBI, if it is if we consider an example, then the SBI account will be credited. And the third is personal accounts. Personal accounts are nothing but this individual and entity company's account. According to the personal account, debit the receiver. The rule says this: debit the receiver and credit the giver. So, example, if there is a Ram, have taken 2000 from Srinu. So here the Ram is taking 2000 from the Srinu. According to the personal accounts, the receiver need to be debited and the giver need to be credited. So here the receiver is Ram. He is taking the amount from the Srinu. Srinu is a creditor. So the account will record as Ram account debit to Srinu. How much amount? 2k, 2000. Hope you understood this golden rules of accounting. Thank you.